Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. Let's do this. Let's do this. 50 pips in the house. 6th of August, 2017. No trade calls, no recommendations. Everybody's sponsored for their own stuff. We're here for educational purposes only. So, as we get ready for the week, slow or low liquidity summer months in play here. I mean, it's not a particularly busy week. We do have a lot of stuff out of New Zealand, Australia, and China. So, Aussie and Kiwi are clearly going to be on deck. And, that starts with inflation expectations in the overnight session out of New Zealand. We do have some minor points here or there, but nothing that should really shock the calendar, right? Heads up on Tuesday for that trade balance out of China, and then we'll get to Wednesday when we've got the official rate decision out of New Zealand. So that's, first CB in the house, and then weekly jobs numbers out of the US. We got PPIs, we got a couple of FOMC speakers, and then on Friday we do have the CPI, core CPI out of the US. So that should be fairly interesting with Kashkari speaking, which is always interesting, and we also got Kaplan speaking. So again, not an overly busy week. What's going on? Nothing much, right? Well, a lot of things underneath the surface maybe, but we're still kind of stuck. So what I thought we'd do today is maybe run the video a little bit long and just go through a little bit of a review of our chart book here, just to have a chat through the chart. So VIX, what's happening on the VIX? Nothing much, holding around at lows. We did have a little spike couple of weeks back, but after that fairly subdued. So again, we still think that we're going to stick with what we said. We'd expect more chance of seeing a spike into 15 20s than a day close below that 10. We'll have to see how that plays out, but this is just going to take some time, right? What's happening on the SPX? Well, you can see here on the weekly, it's going nowhere fast, stuck. We've had that record number of days where we haven't had a range outside of 1%. Most recently, the wildest day right here, we had about 0.98% move. So not even a 1% move. So again, really boring action as it's holding at this 123 extension of the most recent move, right? So our base case here isn't going to change. We still think that if we get some mojo, then the next upside targets are going to be 2,500, right, into that 150 extension, which is just a little bit higher. And on the way down, if we get a little bit of a sell-off, God forbid, we'd be looking at 2450s. Now, if those 2450s give from a day close perspective, then we think there's a very good chance we see 2400s, but that's not really in the cards now. If you're looking at the NDX, here is, it looks a lot weaker for us in terms of just the price action, and it looks like there are more cracks here. You see how it's just hovering here, not getting too much traction. If you look at it on the weekly, you had last week a little bit of a range expansion, there, but intraday, but then, still stuck here like the ES, but it's looking a little bit weaker. And you've got a lot of the individual names which are not looking too hot. We'll look at those later on. But here, clearly, if we start to get some traction below this area, we would expect to see a move, fill this gap and a move all the way back into these lows, basically the 56.00 to come fairly quickly. If we break below there, that's just 2% to fill that gap, and then you probably got a 4 or 5% move all the way down there, and then we'll have to see if it gets interesting or not. If you look at the Dow, so basically not a lot happening. We're in complete grind higher on low volumes, these grind higher in the overnight session. So it is what it is, right? As long as it grinds higher, you can't do anything about it. You've got the Trump 22K here. As long as we hold above, this is likely going to continue to try and grind higher, but sooner or later it will come back to reality unless some super positive news hits the markets. And what we tend to know from experience is that if you see any kind of selling coming in or any kind of stops getting triggered, all this ramp, right, all these little overnight gaps, all these moves we would not be surprised to see most of this, if not all of this move, given back in one day, right? So again, for now, as long as it's playing ball, it's grinding higher. But, you know, it's free money really for all the intraday players. You know, you're coming into the day, coming into London, buying the overnight session, stop below previous day lows, and this is just continuing to grind up, right? You can look at it here, or you can look at it even on something like a 1 hour chart here. You see how this is, you know, there's some people talking about free money. Basically, you're starting coming in. We never take out the previous day lows. 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 We hold the previous day lows. We hold the previous day lows, right? So you see this, all this series of runs here. Essentially just buying, stop below previous day low, flattening out at the end of the day, or holding. Next day buying, stop below previous day lows, flattening up at the end of the day, or holding. You buy next morning, stop below previous day lows, and that's just the free money, right? And you're just playing this game. As long as it works, it works. You can't argue with free money. But sooner or later, also because this tends to be on low liquidity and these overnight sessions, as soon as you get some decent action, especially if it's to the downside, this tends to give back very, very quickly, right? But again, we'll have to see what happens. Still, it is what it is. The rut also, which is fairly interesting. Again, it's we talked about this divergence here with the rut, basically, where Dow keeps on closing positive, and you had all those negative closes on the rut. So here, this is just looking too pretty. It could easily start to ramp with all the other indices, but here to us, it looks like it's looking heavy, and it looks like it wants to slowly try and make its move to the downside. So if you had to be aggressive trying to short one of the indices, we'd much rather try to stay short the NASDAQ or stay short the Russell, you know, so that would mean any kind of, you know, weak action, try to press it, or, you know, any kind of ramps, try to get short. If you look at this on the weekly, also it's fairly interesting because you see the action, right? Can't hold above, you know, it's tried to break here, just can't, and then it sells off here. So as long as these highs hold, we expect to fairly good chance that we see a move back down. It's not a huge move, right, off those highs or off here back into those lows. It's about a 3-4%, similar to the NASDAQ. Then it gets interesting, you know, from a bigger perspective. This is going to correct a lot more. This is fairly, you know, fairly interesting chart. It could get interesting fairly quickly, right? What does that mean for the DXY? So again, for the DXY, I think going into the week, everybody's going to be looking for a bounce. You can't really not look for a bounce if you look at the chart, just seeing the candle pattern, right? 200 DMA, our base case was that we had some unresolved business at the 200 DMA and that it was going to break before it actually tried to reverse higher. It's pinning just ahead. Right here, what we'd be looking at is, again, daily close below here gets very, very heavy. All the cyclical structural dollar bulls are going to have to change their idea, or at least sit down and rethink it. On any bounce, we would not get excited on any dollar strength here unless we never really get excited, but yeah, unless we get back above the 94.50s. Now here, if it gets back above the 94.50s, then we expect you could easily get another $1 of $2 to the upside very, very quickly in terms of a squeeze. But again, you know, there's no reason why this couldn't move all the way back up into, you know, closer to that 100 and then really sell off from there, right? So it's really not a done deal. This is far from a pretty move off those highs. So unless something big happens, you know, you would not expect that to completely give that back very, very quickly. Now, stranger things have happened, you know, less strange things have happened, or stranger things rather, things have happened this year. You know, look at what happened on November on the election, you know, so you can't give anything for granted. But here, going into the week, we'd still be a little bit cautious here. We would not be surprised to see this trading lower, but at least intra-week, any close that is not outside of this 94.50 or these 91.90s, we think it's a lot of chop inside this low range. We need to see press outside to probably see a little bit more Momo coming in. In terms of gold, what's happening on gold? So our base case on gold hasn't really changed. If you look back on the daily, it's a little bit under pressure here, was that we're breaking out and we're going to rotate back into the 1350s. As we said, as long as we don't get a day close below 1250, we're going to hold that view. So here we had a little bit of a sell-off. Again, I wouldn't be reading too much into it. We'll have to see what happens this week. Day close below the 1250, we would have to shift to sideways and possible down. But as long as we don't close below there, we still think any move that holds is going to take a stab at the 1300 on the next test is going to break and then ultimately try and resolve its way higher to 1350s. You know, a day close below the 1250, then you know you'd have to expect this trend line of the 200 to try and get tested. So that's the way we'd be looking at that. What's going on crude? Probably confusing the children here. It's, you know, technically it's bullish, right? There's very little, you can't really argue with it. It's looking bullish. As we said, 50 was the area to try to fade this if you wanted to. So you got a nice little fading opportunity there. But also equally, as long as we didn't close back below the 4820s, for us it was just a fade off the round number. But ultimately, as long as we don't close below the 4820s, we expect this to try and take these stops out, as it would almost be too good to be true to this to hold to then get the 20s, right? So we'll have to see what's going on. For us, inside 50 and 4820 is chop. A lot to do about nothing. Don't get confused by velocity of move inside range. Closes outside bullish, closes below bearish, right, to the upside bullish. And again, we very much like to get a chance to short higher up, but we're really not in a hurry. And, you know, we'd probably consider trying to get long on maybe into the 47s or something tactical. But for now, no position, not looking at anything in too much detail here. What else we got? Hold on, let's do the ZBs just to finish off, and then we'll look at some currencies. ZB's key zone here, actually, let's step back and look at a bigger picture view on the ZBs, whether you look at it on a monthly, right? Look at it on the monthly, right? So this is a really, really key zone. And again, you know, market split, guys saying that this is the ultimate cyclical top and these are going to crash and burn forever. Then you got a whole other crowd that's saying basically that no, because whatever happens on rates, whatever happens to the market, it's, you know, it's all going to be bullish bonds, and bullish are going higher. Buy, and we have to make new highs. Bottom line here, you can make the argument for both things. I think both fundamentally and both technically. So we'll have to wait and see. I think intraday, there's not unless you're scalping for, you know, something like, you know, 10 ticks here or there, which is interesting on a ZB futures. We particularly like to do that. But right here, in terms of bigger picture move, it doesn't look like it's expensive enough to really sell unless you're already in a trade, and it doesn't look like it's cheap enough to particularly buy here. So we'll be focused, you know, maybe could get interesting, move into 157s, or if we get back into 147s. But right here, I think especially in low summer doldrums, and probably be more interesting to look back at this towards, you know, Jackson Hole. What else have we got here? So actually, before we do the currencies, and just to go through it, one thing I'd keep an eye out going to the week is the financials. Interesting here, if you look at XLF, it's going to be very interesting to see if it holds this breakout. As long as it holds, it's kind of like the Dow, right? As long as it holds the breakout, grind higher, don't be surprised. But if it trades back below, you know, then we wouldn't be surprised to see a fairly decent correction here. So this is a particularly interesting level. So I think this is one chart where there should be some interesting trading opportunities this week. EEM still on, actually on a weekly. Was it? I thought I had something interesting on EEM. No, there's nothing too interesting here on EEM. What else we got that could be interesting? Oh, J&K, I think that was the one I was looking at the other day, which on the close on Friday, which is interesting here, right? You see basically we've had these two breaks higher after basing here for a while, and this doesn't bode too well. So I think as long as any rally back above here, even intraday, gets sold and we get closes back below the 3720s, we wouldn't be surprised to see a nice little pullback here. And even nothing huge, but at least 1 to 3% move lower. That could be fairly interesting, but it's an interesting trade location as we go into the week. What else do we got? Transports are still looking ugly. Any bounce at this level that can't close above, we'd be looking at this as a sell for a continued move lower. And again, if you look at the if you look at the tech stocks, there's Amazon's probably the nicest one to point out. This is very ugly, right? We talked about this psychological 1000 number, and look at how we traded here, right? Started to get a lot of volatility coming in, very whippy. This is when we said it looked like something broke here. Then it tried to break higher. It slowly made its way. Then we had this ramp, and look at this. I think it's hard not to argue that that looks like a blow off top, and as long as this gap doesn't fill, this looks like the kind of gap, those breakdown gaps that don't fill for a while, right? And especially as long as we hold below the 1000, this looks a little bit heavy. Now, don't get scared, but if you flip on a weekly, it looks even uglier. So I think it could get choppy here, but as long as we don't get any real strength above that gap, as long as this holds, there is no reason why you can't see this correct something like 10%. Even from here into those lows, that's about 6%, and all the way back into this previous high, it's about a 13% move. If you put some moving averages here on the chart, just put the fifth, say this would be a decent correction coming in. So it looks a little bit funky, and you've got a lot of other of the tech charts, that look a little bit dodgy. You can look at Nvidia here, hovering at those highs. You can look at the action on Tesla. I mean, here we got a little ramp, but clearly, as long as we don't regain those highs, there's still ample opportunity for this to trade back much lower. So we'll have to see. We'll have to see what's going on there. So I have no idea how long I've been rambling on for, but let's look at some currencies before this video gets way too long. So Euro, what's going on the Euro? So our outlook on the Euro was that we had to, there you go. So we were lone bulls from December last year saying that this offered exceptional risk reward, even if you were trading with a very wide stop for a move back into the 200 week, and our base case was that we had to clip those stops above the 200 week, and then we might get a tradable short play, but ultimately this is still fairly bullish. So what happened here? So we've come back into that 200, clips the type stops, all those people trying to short the first touch, not a particularly high odds trade the way we look at the market here. And our base case was that we're coming back into this whole very nice level, because we had that 200 and we had these previous supports that should act as resistance from 206, 2010, 2013, right? All these levels coming in, right? So these are the three lines we have up on the chart and shaded with the box. So we said, this is going to be an interesting place to, first of all, flatten up longs into that 200 and then look for a kind of tactical opportunity to get a little bit short. So we got that on Friday, right? Even if you see the end of week action here, you had a little exhaustion with a 4-hour negative close right at that previous support acting resistance. And then we got this sell-off here. Now, I know a lot of people are getting very excited about that sell-off, but just to put things into context, even on the day there, it sold off about what? Not even 1.5%. And just to get back here, just again, to put a little bit of a context here, even if you take away the move off those lows, what, about 15%? And if you forget the move off those lows, if you just look at the gap, again, where the shorts were saying, oh, the gap has to fill, just off the gap that didn't fill, that's a 10% move. So really a 1% correction after that kind of move is really nothing to write home about, right? Can that turn into something bigger? Absolutely. But, don't get too excited for now. So our base case here is that as long as we hold inside this shaded area, there's potential for sideways action or more damage to be done to the upside. If we close below this area, especially from a weak close perspective, then we could see a nice little move all the way back into, 113, 112 level. But as long as we hold in this shaded area, a little bit of caution is warranted. So again, clearly the higher we ramp up with the euro, the less upside you've got, and equally, as everybody was getting excited here calling for euro sub parity, blah 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 blah, what happens? Everybody shuts up, and then now here you have all the people talking about euro at 140, 130. So don't pay attention to the talking heads. They just come out at, they tend to come out at the moments of max pain with the wrong call, right? So usually it pays to fade them. But again, let's not get, I digress there. So again, let's see what happens in the week. But again, as long as we hold above 116.50s, a lot of chop sideways, not a lot on the calendar. We'll have to see what happens. If we get a day close, a week close below there, then we could see a little bit more downside. What else we got? Yen. I know a lot of people are getting excited about yen. Right here, right now, for us, it's fairly neutral. We still maintain that it's all about the 112 mark. So this is a broader chop zone. 108.10s to the downside, 114.30s to the upside. As long as we hold below the 112 from a day close. So again, even on any strength, as long as we don't close above the 112, we expect this to come back down and try and press into this lower support zone. If we get a day close above the 112, then we think there's room for a squeeze and possibly 200 plus pips squeeze to the upside. So clearly velocity of move, unless we break these lows, is the potential is to the upside on a squeeze on a day close above the 112. But for now, it's still sideways here. And as long as it's holding below, we still have to go with our base case that it's going to try and grind its way back down here. Now, below 108, then it gets very, very ugly. You'd be looking about 200, 300 pips to the downside in terms of a puke, the same way you'd look at a squeeze puke back above the 112s, right, in terms of velocity of move. Now, cable, what's going on cable? Again, I'm not going to mention, I got a lot of people wrote in angry about me commenting on people looking for a rate hike, so I'm not going to bother. But we'll just go back to what we discussed in the last Sunday overview. And if memory serves, last Sunday what we said is we were looking for this to come back into the shaded area and press into that into Super Thursday, right? And then at that point get an opportunity to get back short. So I think really we can't complain in the way this played out. Now, technically, it looks like it's trying to hold, it looks like it's trying to hold some kind of a nice little upside rotation, and that it still has some upside to go, right? So if you're looking at it technically, what I would say is, as long as we hold this 130, then your case could be in play for a move back higher, right? Wherever that may be going. The only problem here is that, as much as I think even both sides are probably willing to agree, is as long as this move, if it's in play to the upside, is likely a technical and fairly healthy move. If the velocity of move is, if something happens, most likely it's going to be something ugly, and that means that the velocity of move is stacked to the downside. So I'd be a little bit cautious trying to get too gung-ho on the long side. But here, no real conviction either side. Our base case was look for a move back into those highs. That's going to be into for a BOE not to raise, chance to get short, tactical, and it could turn into something more, but really not looking for the swing short of our lifetimes. So here, fairly flat, fairly neutral, and looking at how the 130 is going to behave. Clearly, if the bulls can't hold the 130, there's potential for 128 to the downside. As long as the 130 holds, well then, unresolved business at the 132 and a continuation of this, this rotation trying to press higher. What else have we got here? Aussie and Kiwi fairly, actually let's do Euro GPB. Euro GPB, no big change with this trade where we have a bigger term swing in play. An opinion from, a trade on a bigger structural view here. So we're looking for this to slowly rotate higher. Our call for this is to ultimately, actually maybe on the monthly it's going to be easier, ultimately come back and test these highs close to parity, right? So this move is completely in play, right? Now if you look at it on a daily, as long as we don't trade back below the 88.50s, this move is still in play for us, and we think that the path of least resistance is higher. So again, we consider any move back down here as buying opportunities to continue to press higher. And to finish off with GPB related, GPB JPY, we look at these a couple of a while ago on a Sunday, I think on a Sunday video, saying that we thought going into the week it was the most interesting short opportunity if you're trying to get short GPB. And again, this is holding. It's stalled here into a confluence of I think it's the 50-day moving average, so a lot of chop, but the spike got sold again. So going into the week, what you want to look at, and again, it's yen related, right? It's very similar to USD JPY. If we can hold here, you'd expect to see bounces, but as long as we don't take out these highs, our base case is still that we've got unresolved business to the downside and we're going to come down much lower. CAD, what's going on CAD? So our base case here was also that we had to come down and clip the 200 week, and that the 125 was pivotal. You see how we stalled ahead of the of the 200 without clipping it. So our base case, the only way we'd want to get long is on a flush of the 200 or daily closes above the 125 for a potential back into the 128. So you see that this stayed heavy for quite some time here, and we got some fairly decent action here as you got, basically we printed these lows. Then we got the first daily close above the 125, comes back ahead into the 125, chance to get long. As long as these hold, you're good, or that's the expectation. And now we're in this rotation back to the 128. So what we'd be looking at going into the week is that 128 being pivotal. So what that means is clearly here we caused a lot of damage to the downside, so this could bounce a lot and still stay bearish even into the 130 or higher. But we look at that 128 as pivotal, right? So basically very interesting support resistance level here. So as long as we can't break back above, then we consider the short-term scalps done to the long side and 125s to come back into play and this 200 to have to get pierced. If we get daily closes above the 128, then we would expect the 130s to be attracting as we get more of a correction of this dollar across the board, more squeeze, etc., etc., etc. Aussie and Kiwi. What's going on Aussie and Kiwi? So here again, also we expected that 200 to get clipped, and then nice chance to get to look for shorts for a little bit of retracement. If you look at the daily move back into that level, nice little daily close, actually two nice negative daily closes, and opportunity to try and scalp this to the downside. As long as the 80 doesn't hold, we don't get a day close above the 80 mark, we expect this to try and come back into the 77, but it looks like buyers are still supporting here. So it's all the same thing. Is the dollar going to do what everybody expects it to do going into this week, is to rally a little bit to see some profit taking on this most recent dollar move, or is it going to continue to confuse the children and continue the relentless march lower? That's the big question. And Kiwi also fairly similar, right? Ramp back into that daily close, another daily close below this pivotal level. As long as we don't get daily closes above the 74.80s, call it 75, you'd expect it to come back down into these 73.70s. Day close above, back bid. Day close below, then it could try and come back into this breakup zone. But I don't think Kiwi's particularly interesting going into the week. So guys, this has probably run way longer than most people were expecting. Again, it's been a while since we did one of those live ones too, so I just wanted to cover a bit more stuff, a bit more charts, because I know a lot of people like when we do the detailed reviews. So have an awesome day, rest of the day, wherever you may be, whatever you may be doing. As always, thank you so much for the banter on Twitter. A lot of guys posted a lot of hilarious stuff last week. Thanks for the comments. Thanks for liking. Catch you guys soon. Have an awesome one. Take care. Thanks. Bye-bye.